heavy duties on Canadian canola seed imports. Beijing announced temporary duties of 75.8% earlier this week following an anti-dumping investigation. That is a big blow for Canada, whose biggest canola seed market is China. It exported $3.6 billion in canola products to China last year. Voznesenski is Associate Director and Sustainable and Agriculture Economist at CBA and joins us down under. Dennis, thank you very much for joining us. I first want to get your take on this comment that we got from U.S. President Trump saying that China is worried about its shortage of soybeans and he hopes that China will quickly quadruple soybean orders. Now, he's been keeping stock of what China has in terms of its agriculture supplies. Is his take on soybeans, is that correct?
Well, the tricky thing about China that it is incredibly difficult to actually understand what stock levels they have there. But what we can definitely assume is that Chinese soybean production is only around 20 million tons on average, maybe a little bit more depending on the year, and they import over 100 million tons. So it's not like wheat and corn where they're almost food secure and self-sufficient in it. For soybeans, it's just not the same. They produce around 20 million tons. They import over 100 million tons. So before President Trump became president in this second presidency, China bought a lot of soybeans. They had a large runway where they could negotiate. Eventually, that runway is going to run short, and they will likely have to start ramping up purchases again, including from the U.S. The question is, when do we actually reach that point? Well, that's anyone's guess.
Okay, I want to take this a little bit farther because from the data that I've seen in 2024-25, U.S. soybean sales to China at a 12-year low. As far as things currently stand, 2025-26, there are no contracts that exist. So how soon do you think that China needs to start U.S. sales?
Well, the interesting thing is that we've actually seen a significant decline in total imports of wheat, of corn, of barley from China. There hasn't just been reduced imports of soy from the U.S., but more broadly across the soft commodity spectrum. And one of the hypotheses is that China knows that eventually there is going to be a trade deal, and an olive branch could be the fact that they could purchase more agricultural products from the U.S. In reality, it's agricultural products that they'll need eventually anyway, but it could look good as part of a trade deal. In terms of when, well, we've seen the negotiation between the U.S. and China expand for another about, 3 months or 90 days, you just said. In that period, in theory, we will see a further rundown of stocks. And something else that you may find interesting is that China's just put anti-dumping tariffs on Canadian canola, another oil seed, so you can both use soybeans and canola to crush them into oil and meal, use the oil for food or biofuels, and use the meal for animal feed. Maybe they feel confident that they're going to come back to the U.S. soon and buy soybeans, so that's why they can put tariffs on Canadian canola.
So I'll get to the canola in just a minute, but I just want to get your take on this strategy that China has, and maybe they are holding fire. But soybeans, soft commodities, why does this keep coming up in trade talks between U.S. and China? Because this was also the case in Trump 1.0 or in the first trade war.
Well, in the agricultural space in the U.S., there is a large support base for Trump. So it makes sense that when either China wants to disadvantage President Trump or advantage him, they do target the agricultural sector. It is also just a very large export commodity for the U.S. to China. And most importantly, if you look at where soybeans are produced around the world, there's only primarily two places. You either go to the U.S. or you go to South America. Eventually, if you buy as much as you can from South America, you have to go back to the U.S. There's these, I like to call them, you know how for physics we have laws of physics. Well, for commodity sourcing, there's laws of commodity sourcing. There's only so many places in the world you can get certain commodities. And whether you look at soy or corn, either North or South America to a large extent.
So trade talks and trade truce could potentially spur on more buying out of the United States. But is China also trying to cut its dependence in the U.S.?
That's right. So if you look at probably 4 or 5 years ago, China used to import almost 45% of their soybeans from the U.S. In the last couple of years, that's been going down to the low 30% mark. So China's definitely trying to diversify away from the U.S. But one of the interesting things is if it's not going to buy U.S. soybeans, it has to go to other oil seeds, including either Australian or Canadian canola. There is now tariffs on the Canadian canola, and China doesn't buy our canola in Australia due to phytosanitary issues. So due to a particular disease that we on occasion have here in Australia. So it's an interesting one. The question is, where are they going to source their oilseeds? And the fact that there's not many other places in the world where they can do that means that maybe it's more of a short-term negotiation strategy, and that they will have to come back for U.S. soybeans relatively soon.
On the canola with Canada, 75.8% anti-dumping, and they'll have one more month, I believe, to kind of figure it out to see whether or not this is going to become more permanent. But this is being read as in response to the tariffs on EV imports from China. This is a China-Canada issue in terms of trade. What do you make of what China is going to be doing in terms of the canola? Canada is its biggest supplier. China is the biggest buyer. How is it going to end up?
Well, there's pretty much only three large exporters of canola in the world. It is Canada, Australia, and Ukraine, and that is the order in terms of size as well. If they're not going to buy Canadian canola, they're likely going to have to come back for Australian canola, which they haven't been buying since around 2020, or not in any significant volumes, or they'll have to go to Ukraine and purchase it there. Alternatively, possibly they have bigger reserves than markets expect, and maybe they can hold off a little bit on those purchases. But in reality, there's only three large exporters of canola in the world, those three that I mentioned: Canada, Australia, and Ukraine. And if you're not going to go to Canada, you likely have to go to the other two. And the challenge that could arise for China is that, well, Australia, the majority of our exports, in some months over 80% goes to Europe, where it's used in biofuel production. That is, biofuels are driven by government policy in Europe, so they need to use a certain amount of canola oil to create a certain amount of biofuels. So for road-based transportation, if they don't do that, well, they simply can't do it. It makes that demand inelastic. If it's government-enforced demand, it's government-enforced demand, and it's very difficult to compete with other countries like China. It'll be difficult to compete with Europe for our canola. So if anything, it'll just push prices up, likely for Australia.
Does China have the leverage here in terms of using agriculture as a high-impact, low-cost weapon in the trade war?
Well, it's really interesting that you asked that, because I can actually give you two examples now. Not only has China struggled with using tariffs on agriculture, but so has the U.S. There's only so many places in the world to get commodities, and if you keep tariffing different countries, you're going to run into problems. Look at right now what the U.S. is doing with tariffs. On the beef side of things, they can't source enough domestically because they're at a multi-decade low in their cattle herd. They've put 50% tariffs on their second largest supplier, Brazil. They put an additional 5% tariff on New Zealand. That was about the third largest exporter, and they put 10% tariffs on Australian beef. There's not that many places in the world where you can get beef, and if you start tariffing enough countries, you're just going to raise prices for yourself. So whether that's for America or China, you start running into troubles, especially if it's for more niche commodities like canola.